Hello, my name is Mike.Weinberg, Senior Vice President and Partner at Gateway-Acentria Insurance, part of the Acentria group of insurance agencies with over 20 offices in Florida alone and writing business all over the country. Thank you for clicking on this Insider Tips for Homeowners. So often we get many questions about homeowners insurance, and I wanted to try and clarify some of the misconceptions for you. One of the things that we find that's very interesting about homeowners, and often a problem and hard to explain to clients, is the difference between replacement cost value and market value. Here in Florida, it's not uncommon, and I've done it myself, to buy a home in a bad market well under the cost that it would be to replace that or build new. However, insurance is going to mandate that you insure the home for the replacement costs. The reason for that is if that home burned down, they would have to come in and rebuild your house, and they can't do it by purchasing a undervalued house and putting it on your lot, obviously. So they will mandate, but ask your agent to explain to you the estimator on how they get to that value and what it means, and if there's any wiggle room for play so that you aren't buying too much insurance. The second item I want to mention is the contents coverage. Typically, a homeowner's policy includes 70% of the value of the house structure, that's without the land, as contents coverage. So if you have a $500,000 home, you will typically have $350,000 of contents coverage automatically. The interesting thing is that many people with a $500,000 or even $1 million or $2 million home may not have contents coverage equal to 70% of the value needed. So you should speak to your agent, because many times companies can reduce that coverage down to as low as 50%. So check with your agent. If you're in a $1 million home and don't have more than $500,000 in contents, then there's no reason to have $700,000 of coverage. I also suggest that you look at deductibles. Typical policies may have all other perils, meaning except for hurricane or windstorm, of a $1,000 deductible. Ask what it would cost if you have $2,500 deductibles, $5,000 deductibles, or even higher. You may find that what you're insuring is self-insuring with a larger deductible is much less than the premiums that you would spend over the years. Along those lines, please also think about your windstorm coverage with higher deductibles or possibly not even covering for windstorm. I know clients who pay $100,000 a year for windstorm coverage. They cancel the coverage and put the money in the bank as a slush fund in case there was a hurricane, and they feel much better doing so. The last thing I want to mention is that all of the homeowner policies that I've ever seen, and this is standard in the industry, have limitations for certain collectibles and fine arts. So if you keep a lot of cash or coins or coin collections in the home, stamp collections, gun collections, fine art, jewelry, most of those are subject to limitations, and they're not what we call all-risk coverage. So you need to check with your agent about scheduling those items on a floater policy. The example of a difference between scheduling and not scheduling is, let's say you have a watch, a fine watch worth $10,000, and your grandson comes over and flushes it down the toilet. Under the basic homeowner policy, not covered. You may still love the grandson, but not covered. But if you schedule that watch, it's covered, all risk, no deductible, replacement cost for that watch in that condition. So check with your agent about any limitations that may be in your policy. So this is Mike.Weinberg, Gateway-Acentria Insurance, inviting you to call me anytime you like to discuss insurance matters. Every call will be a no pressure, no obligation, courtesy call with no fee involved. I look forward to hearing from you. Mike.Weinberg, my direct line is 954-332-1900, 954-332-1900.